Ladies and gentlemen, we are back at it again, bringing you a brand new supply and demand video. In fact, this is going to be a three-part video series for you guys. In the first video here, we are going to talk about what is supply and demand, kind of the basics and the concept behind it, level 1 price action, the basics, and how to identify and draw supply and demand zones. If you guys do enjoy this video, I'd much appreciate it if you guys hit that like button. If you have any questions about this, hit them in the comments below and I will get back to you. If you guys would like to see more of this, you can check out my YouTube channel. Go to my tips playlist where I talk more about each individual section that I'm going to cover. And in fact, many more, it's about 20 videos, going in depth for about 10 minutes on each video. And as well, I have a free mini trading course for you guys as well, talking about the supply and demand methodology, but also covering why 90% of the traders out there are losing money, dealing with information overload. What are my top 3 tips? Getting access to my watch list, and so much wonderful information. If you guys do want to reach out to me on social media, Moneyball Austin, Twitter, Instagram, Facebook, you can always subscribe. All right, let's get into it. Here we go. So the first thing let's talk about is what is supply and demand. Now, as we know, it's been used in day-to-day life for thousands and thousands and thousands of years. All right, so how does this replicate it into the stock market, into the currency market, into commodities, into crypto? Well, as we know, if there's more buyers than sellers, what does price do? It goes up. And if there's more sellers than buyers, prices go down. All right, and we can see that on a chart we can see the lines going up and down, right? So if I ask you who is making these big moves in the market, let's look at the charts. Who is making these strong moves in the markets? Do you think it's retail traders or do you think it's institutions, big money going into the market? All right, retail traders are just a drop in the ocean, literally just a sprinkle of water compared to the big money that's out there. Those are the guys that are making these big moves in the market. So if we understand that the big money is making these large moves in the market to the upside, to the downside, to the downside, to the upside, right? They're making these big moves, and we're going to see that in the market by having these very strong candlesticks. If there's balance in the market, prices will go sideways, all right? So what we're trying to do is identify where these big banks, where these institutions, where the big money is buying and selling at. And they leave footprints. And we can see the footprints by the candlestick, we can see these big strong candles up and big strong candlesticks to the downside, okay? So that's kind of the background of the methodology and how we can identify where they are buying. Now you might be asking yourself, where can we identify where they're buying and selling? And how can we draw the zones? It's a very good question. Let's talk about that. Well, we can identify where they're buying and selling because we see the large moves into the market. So let's start with just a regular supply zone. In fact, there are 4 supply and demand patterns out there. Let me bring up this little box for you guys. So we got supply zones right here. We have 2 patterns, rally, base, drop, drop, base, drop, and there's another rally base drop. Now for demand, which is buying, we're going to see the exact opposite. We're going to see a rally, then price basing for 4 candles, for a couple candles, and then rising again. That's typically a continuation pattern, followed by here another one, a rally base goes sideways and then pushes up again, rally base rally, and then there's the reversal patterns, the drop, the base, the rally. All right, those are the 4 patterns that the supply and demand traders typically look for. And if you look at what do they all have in common? Well, they all have in common a base and a very strong leg out, right? They all have in common a base, but more importantly, we want to see a very strong leg out. A rally base, very strong rally out. Rally base, very strong leg out. Drop base, very strong leg out. All right, notice how all these areas have strong imbalances. Same thing right here with this demand zone. Very strong leg outs, candlesticks that come after the base. So what we're trying to do is, well, why don't we identify where they're trading at by looking at the base? Where did the strong moves come from? Where did they originate? And we can see it by marking out these general zones. Okay, so let's get into it about how to actually draw them out there, because there's tons of YouTube videos, guys, out there saying, this is how you draw them, this is how you draw them, this is how you draw them. You really just got to pick one way that you like, how you analyze the market, and be consistent with it. Now, what I'm going to share with you is how I personally do it. Now, here we find a strong leg out, right? We got a rally base drop right here, and we're trying to highlight where the average of the orders were, the average of the base. Some people like to draw them wick to wick, as in take the whole zone. I'm personally not a fan of that. The reason why I'm not a fan of that is because you're widening your zone, you're including more of the basing candles, when in my opinion you could shorten up the zone closer to where the imbalance happened. So if I asked you, where did the imbalance start from? Did it start from here on this, right where this orange line is, or did it start higher up here? It started higher up there. So I'm trying to get the meat of the base of where the buyers or sellers took control. Okay, so that's how I would draw it for supply. Now some people might actually just take the wicks. I sometimes do that, but I'm not really a big fan of doing that type of stuff. Only in certain scenarios when there's, say for example here. We'll talk about that in a minute. But if we're going to draw out this supply zone, I'm going to take the meat of the orders. Now, I get a lot of people messaging me on social media saying, hey, is this correct how I draw them, how I identify them? And I'm like, no, I wouldn't draw it like that. Or I wouldn't call that a supply or demand zone. Really focus on the quality of the leg outs. Strong imbalances. Big money is creating these strong imbalances. We're not interested in trading at little zones in here, right? Or in here, or in here, right? We're not interested in that. We're trying to find where the big money came in. Okay, and we're going to see that by these strong candlesticks and then trade at where it originated from. Okay, now originally we talked about this zone up in here. Now in this case, some people might want to draw their zone like that. Now if I asked you, where did the imbalance really start from? Where did the sellers really start to take control? Did they start to take control from up here or down in here? Look at the red candlesticks. We can scroll in, right? The sellers really started to come in up in here, right? So in this case, what I would actually do is, I'm sure if we go down to a smaller time frame, right now we are on the 4-hour time frame. If we go down to the 1 hour, we could probably find a 1 hour rally based drop. Okay. Loading. Why isn't it loading? Oh, there we go. So we go down to the 1 hour and look at that, right where I was pointing. Okay. So this is how I would draw my zone. Once again, to the base of the candlesticks, right? To the base of where prices originated the imbalance. The price imbalance started from up there. Okay, so if we go to back to the 4 hour, this is taking forever. This Wi-Fi is horrible. I'm in Mexico, by the way. Okay, the Wi-Fi is back up. The Wi-Fi was good all day, and then all of a sudden, as soon as I click record, it starts acting up. You gotta love it. So we're still talking about how to draw these supply and demand zones. So for this demand zone, that's how I would draw it. Rally, base, 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 very strong imbalance. All right, the imbalance originated from the base. So I'm trying to highlight the base of the zone, okay? Same thing for supply. We could continue to go back and say, how would I draw these zones? Well, I draw them like this. I would draw them like this. Look how I'm drawing them. I'm not drawing them like this. I'm not drawing them like this. I'm not saying old supply becomes demand. I hate when people do that. They're like, oh, well, this supply zone was eventually removed from way over here. So now that supply zone is now demand. It doesn't make any sense. All right. Once a zone is removed, it's removed. Okay. So here for demand, that's how we would draw it. Rally, base, rally, include the wicks. All right, get the highlight of the move. Some people will say uh, they need to buy 100,000 orders, right? So they can't just click buy 100,000 orders, so they break up their orders into like 25,000, 25,000, 25,000, and each time it kind of goes lower and lower and lower because they're trying to get the next best fill. Actually, if we have a look at not USD, but Japanese yen, we go to the weekly time frame. This is the demand zone that's been holding once, twice, 3 times, 4 times, 5 times, 6 times. And each time it seems to be going deeper and deeper and into it. Once here, deeper, tested again, and now tested again. Now it's gone to the very extreme. Now this thing has been respected 6, 7 times, so I wouldn't be surprised if it keeps getting respected, right? But also what supply and demand traders think is, well, if a zone's been tested so many times, then there's probably not many buy orders left because each time it goes back into that area, there's less buy orders in that general area. I personally don't like subscribing to that mindset. I personally see it as, I think they see it as value. They say, hey, prices have been dropping for quite a while. We want to be bullish the Japanese yen at this area. So let's try picking up some Japanese yen futures contracts. So they're buying the Japanese dollar, right? Maybe they're trying to balance their spreadsheet. Maybe they see a really good trading opportunity. I don't know, right? But clearly you can see that they see value in this area. And each time it's been going into that area, it seems to be respecting it. I personally don't subscribe to that method of somebody gets a sticky note and it says $100,000 or 100,000 buy orders, and they're slowly chipping away and it goes deeper and deeper and deeper. I personally see it as they see value, right? Kind of like support and resistance, I guess you could say, but there is a difference. Supply and demand traders, when it comes to support and resistance versus supply and demand, the supply and demand principle is the more times it's tested, the weaker it is. And I can understand that. And then the support and resistance is the more times it's tested and respected, the stronger it is. So it's like countering each other, right? I personally just see it as value. Hey, they want to get value, boom, buy it, right? We're buying in that area. That's how I see it. And we can find these zones, like I said, by identifying the strong imbalances in the market. Demand, supply, drop base drop, rally base drop. Okay? If we go to Aussie Swiss, right? Sitting inside areas of demand, right? Very strong movement to the upside. We had areas of supply here. We had areas of supply here. We have areas of supply there, right? So that's clearly where they took control previously. And as a supply and demand trader, when a price retraces back into those areas, or I'm looking for buying or selling opportunities, because previously they looked for value. So why might they not look for value again? Okay. So that basically sums up this video, guys. Quick recap. We explained what is supply and demand, kind of the basics, the concept behind it, price action basics, and how to identify and draw zones. Okay. In the next video, we are going to be understanding trends, very important trends, multiple time frame analysis, and we're going to dive a deeper analysis into price action, where we're going to talk about corrections, impulse moves, understand what type of market that you are trading in. It's very important. That's going to be a fantastic video, so make sure you check that out. If you guys want to get that free little mini course that I mentioned earlier, check it out in the description below, and I'll see you guys later. All right, have a good one, guys. Thank you.